Welcome back to Golden Rule Radio. This is a timely one here as we kick off the beginning of the year, but I have to say that anybody that didn't hear last week's show really needs to go back and listen to it. Miles, you and Robert did just an outstanding job of recapping not only the aspects of the metals that we're seeing in the markets right now that answered a lot of questions, but also currency and other markets in general. So thanks. Do go back and listen to last week's show. Kudos to you, Miles. And I do want to jump first into listener questions this week, just because we've had a couple of good ones. First of all, somebody asked if we could touch on rhodium periodically. We'll start doing that a little bit next week. We'll come back to you and address that because there is a ton of volatility in rhodium, and that thing's gone to the moon, even more so than palladium. And then another question was on the U.S. dollar index, trying to get some clarity on the dollar index. We use that term in here a lot to reflect strength or weakness in our own currency. And basically, the dollar index is that. It's an index of the value of the United States dollar relative to a basket of foreign currencies. So you take the dollar, you compare it to a basket of 6 other currencies. And so when we say that there's strength in the U.S. dollar index, that means the dollar is stronger relative to that basket of 6 currencies. What are those 6 currencies? The euro, the yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. So as you take those currencies and measure them against the dollar, that's what drives the dollar index either higher or lower. So without further ado, Miles, I'm going to just hand it over to you and let's jump right into gold.
Sure. Well, I appreciate it, Tori, and certainly glad to have you back this week. Appreciate you saying on a week where you were unable to join us, best show ever. So no correlation there, of course.
I knew that was coming.
Right. I've been waiting like 3 minutes now to say that, so thank you. And good explanation on the dollar index. There's actually a really good Wiki Investopedia article just kind of explaining a little bit more on how the dollar index works and the reason why we do look at it, not just purchasing power, but purchasing power compared to other currencies. So moving over to gold, something that maintains purchasing power long term, regardless of the dollar going up and down and the price going up and down. Gold has been maintaining the same purchasing power since it kind of flatlined here at the beginning of January into some fib levels that go back at least for us to what I think about beginning of December. And certainly by the time we put in some highs there at the beginning of January 6th, seeing a little bit of a sell-off there was not a surprise to us. So, of course, the long-term question is, being that the gold price going back to the March bottom, March 20th, all the way until the top on August 5th, we have corrected as much as 50% of that, and that happened on November 30th. We bounced, and now we're only down to the 382 fib, which is where we've been playing for the last couple days. So we're all wondering, do we turn north from here and kick off the next stage of the bull market that we know we've been in, dating back all the way to 2018 when we put in that bottom around 1150? So are we getting ready for that next step up, or is gold going to continue to trade sideways or possibly down here a little bit for the next short-term couple of months? Now, I don't think that's an unreasonable expectation with the new administration coming in, and I've had this conversation with a couple of clients, and I'm assuming you have as well, Tori. We tend to see during these major political changes, or certainly office changes, and certainly inaugurations, the Federal Reserve and the government is going to step in with things like the Plunge Protection Team to try to maintain stability. They're not looking for growth, they're not looking for decline, they're just willing to do whatever they can to keep things relatively stable, regardless of the, let's say, political temperature heating up over the last couple months and certainly over the last weeks. I think that's a fair way to put it. But they do try to maintain stability during these periods of time. So going into the next couple weeks, I would assume gold is going to stay relatively stable, just like the equity market should stay relatively stable. Now moving forward from that, that's a completely different story.
You know, you're talking about it sort of being in this channel, but we've seen a lot of volatility. I mean, we had $100 swing in terms of 6 trading days, you know, with gold up 50 and then back down 50 and really more than that, more like $120. Same thing as we get into silver. like 11% volatility in 1 week, and yet we're relatively unchanged. And so it's not telling us exactly what it's going to do. I am optimistic. We do need more clarity. Robert, I'm going to kind of throw you under the bus here a little bit, because you did mention to us that in that first year after a new administration takes hold, gold tends to do pretty well. Are we needing more clarity here, or do you even want to get into the job of predicting based on fundamentals like that?
Well, when did I say that?
Didn't you say that? Weren't you the one that put the 4 chart, like you showed the performance of gold after
a while back?
The bar chart?
Yeah. Okay.
Yeah.
I'm just playing with you.
Oh, okay.
I just have to add some color to Miles' boring comments about numbers, So I have to say, along the same lines of a new administration, if Biden starts his administration and starts this huge stimulus plan that he's talking about, if gold doesn't go up, then that is very clear evidence that the gold market's manipulated. I mean,
thank you.
Come on.
Absolutely.
Right. I mean, even if the market's forward thinking, why is it not going up now? Right. So something's going on there. I think it might be somewhat technical, but yeah, I think Biden's huge stimulus package has to be positive for gold.
Well, and regardless of manipulation, eventually it will be. You can only beat the pressures of the market for so long. I mean, we tried to beat the pressures of the real estate market for a long time, and we saw what happened 15 years ago. We tried to beat the pressures of the stock market, and we saw what happened back in 2008. So you can only stave off crisis with spending for so long. They only have the one tool. There's only one tool in the arsenal of the Federal Reserve Bank, and that's inflation.
Print. Yeah, it's a great point, Miles, too, because inflation takes time. It doesn't hit immediately, and it can take months and months to absorb the monetary and fiscal decisions that these people are making. And you're just now starting to see this reflation of the dollar. You're just now starting to see this thing gather steam, and that's from policies that even originated last March as a result of COVID response, right? So you're going to start to see some of these things. Robert, to your point, I think you're right. Once you initiate just the talk, you'll get some market reaction, but the reality even has months delayed. If we're looking at a macro reason of why you own gold, why did you buy gold for your portfolio at $1,000, and why would you buy it at $1,900? It's going to be the same, and you're going to be glad you did when it's at $2,700. So give it time, and don't get sucked into the microcycles unless you're just looking for good entry points, as these guys point out technically.
Speaking of that, I think we nailed this last week's action on last week's show.
Well, blind squirrel, right?
Oh, blind squirrel. Okay.
Yeah, blind squirrel. So, I mean, it is markets.
Not
it is
found. Right.
It is divination on the future. So, but
okay.
We do try to be as reasonable as we can.
Yeah. I think we've been pretty accurate. At least we've been giving both sides of it. If it's going to want to go lower, here's where we think it's going. If it's want to go higher, here's where we think it's headed, with next resistance in place. And here at this 1840 number that Miles talked about last week, it's right here, bouncing off of it just perfectly. Today it pushed up to the 1850, 1860 range, and now it's kind of pulling back this afternoon on Wednesday. So keep tuned in, and we'll be giving you the numbers on the downside, the upside, and where we think it's headed.
Yeah, we had a listener comment even last week that said this video is from yesterday and mentioned gold going to about 1840, and today there it is. So Bruno even brings that point up, and that's why I started the show giving you guys kudos, because it was a good show, and in uncanny fashion, I appreciate the fact that from a technical standpoint, you're not perma-bulls. You're just realists, and let the charts speak for themselves. So what about silver, Miles? I mean, not to put you on the spot, but let's do that same thing. Tell us where silver's going to be tomorrow.
By the time everybody listens to
this
show, right?
Well, sure, and you actually had the perfect segue a second ago, right? When you were talking about somebody who's looking at entering the gold market, they're thinking and maybe kicking the dirt beneath their feet because they thought about it at 1,000, they really thought about it at 1,200, they really wanted to do something at 15, and now we're at 19. Well, there is something you can still do, despite the fact that we think we're going to continue a pretty strong bull market in gold, and the direction gold's going to go for the near future. There is something you can do somewhere else in the precious metals market, and I'm glad you bring up silver, because last time I checked, gold has set new all-time highs with that previous move up, but silver's still only about halfway there. So I agree with you. I think silver is the go-to for somebody, especially looking at getting into precious metals for the first time, or absolutely if you've been a precious metals investor for a number of years and you're looking at branching out into some other metals and you haven't looked at silver not just as a means of small exchange in smaller dollar amounts, but really building a precious metals portfolio that is directed towards, say, our ratio trading strategies that we try to employ with our clients. Then looking at the silver chart, I'm starting to get pretty excited here because silver topping out at around $28 back in the beginning of January, we're seeing a very similar, just more volatile move. I mean, silver put in a bottom down at around 24.30, and we've climbed back up to the low 25 range. So while gold's been sort of hard stuck sideways since we hit that bottom at the beginning of January, silver to me looks like it might actually be climbing upwards a little bit.
Also, platinum's about half the price of its all-time high and starting to move. So we like platinum, as we've talked about here on the show. And Miles, any technical points you want to make on platinum?
Yeah, platinum has definitely been on a tear since the March drop. I mean, we're looking at platinum coming all the way down to 560 after the initial COVID spike down in all the markets. Platinum has now beat out its January highs of 1,040, 1,045, and has been knocking on the door of some pricing that we haven't seen since 2016. Now, this pricing, when you're looking at platinum, if you take the start of the platinum bear market, which began back in February of 2013, when we established and broke below the old all-time highs, and we started moving down February 2013, which ended at the beginning of 2020. We're actually right at the 50% retracement back up. So we're actually halfway to the start of the 7-year-long bear market in platinum as the stock market turned around. So platinum, again, like Robert, you just said, it's halfway there, almost exactly.
And as we've said, we think platinum is maybe about 1.5 years behind gold. Very similar action in platinum before it's starting this breakout. So if that's true, and that does play out, then platinum is going to catch up to gold in short order. So you want to own some platinum. Primary focus for us is gold and silver, but owning some platinum makes some sense in a precious metals portfolio.
Sure, and that's a really good point you bring up, because while the starting points may be somewhat staggered, gold begins first, silver's 12 months behind it, platinum's a few months behind that. The ending points are all going to be pretty close to each other. So that's why when we see this breakout in the price of gold, we start getting real excited, not just for gold, but for the comparable metals that when they catch up, it's going to happen very quickly.
Yeah, and I think also platinum was behind gold at coming down in 2013. If we try to pull up those charts, I think it was lagging gold at that time before it went into this long sideways channel. So I think that's going to play out with platinum being about 1.5 years behind gold and making a very similar move maybe this year. Looks like it's heating up, so quite possibly could be.
Yeah, it's just acting more to me like an industrial metal. Silver's got that hybrid money metal, industrial metal component to it. Gold, obviously, the pure money metal. And platinum needs inflation to really get legs, right? And so to your earlier point on a huge infrastructure spending package, further stimulus, even just COVID relief-wise, you're talking trillions of more dollars, and we're already starting to see the inflation pick up. But to your point, too, platinum finished up 10% last year very quietly, even though, Miles, your extremes that you bring up, that's a doubling. That's up 100% from that low. But last year it opened at about 973, and we closed at 1,073. So that's a 10% move, but it doesn't reflect the huge volatility that we saw in the middle of the year. And if somebody was listening to the show and got in timing-wise, they've already almost doubled and have doubled, actually, their money that way. Gold finished up the year 24.4%, and silver just about doubled it at 47.2%. So that is what's caused that ratio to tighten back down, as we've seen the year. And again, silver more than doubled. Yes, from open of the year to close of the year, it ended up 47% up, but we know that doesn't tell the whole story. There was a ton of volatility, a ton of money to be made, and we haven't seen anything yet. I'm very, very optimistic about this first quarter, and I'm very optimistic about 2021 in general. And that includes ratios. I'm very optimistic about our chances of seeing a ratio opportunity in 2021.
So closing out the metals, I think it's fair to say, because of the inauguration coming next week, it's very likely to see the metals trade mostly sideways, but I don't think anybody's in disagreement that we are going to continue this bull market through 2021. Now, the real question is why? We've hinted at this a little bit, but let's look at it in picture form, and that's the good old-fashioned US dollar.
Well, we nailed the little rally that it just had, and it didn't push too high, hasn't pushed into that long-term declining trend line that we've talked about for a few years here. But it did rally off the fib line that we pointed out last week. And so obviously technicals matter when you're talking about multiple currency pairs that are affecting that dollar index.
Yeah, completely agree. I mean, we've kind of relied pretty heavily on this declining floor that was set back in 2016, 2017 when the dollar hit its ultimate high. And then the dollar again just early this year tried real hard to put in a higher high but failed, and it's been nothing but down since March. So I would argue somewhere between this long-term declining trend line, which just continues to be beautiful, cutting its way through the chart, which will probably land us in the next couple weeks just at or above 91, to maybe the previous low we put in back in August, which is about 91.7. So a reversal back up here over the next couple weeks, somewhere in the mid 91 range. And then I don't see any reason, like we've been talking about this whole show, for the dollar to turn and continue to go up long term. I think we are looking at a devaluing U.S. currency for the next 4 years. Might make sense.
Yeah, I have a feeling that this could be the last gasp that the dollar is having before you have this major move down. And if that's the case, this is just a feeling. And a lot of my feelings, since I watch the markets all day long, every day, a lot of my feelings can be actually fairly okay from time to time. It's just a feeling. I mean, this could be it. This could be your last gasp before the dollar heads a lot lower, meaning this is your last opportunity to get into the metals market. We're on the cusp of the commodities sector moving higher, metals prices moving higher. And so I don't know what people would be waiting on. Maybe lower prices, but man, there are going to be higher prices to come with metals this year because of the dollar decline. So this last gasp on the dollar, however high it pulls that dollar index, I think we're ready to go with the metals prices going into this year and then a few years on.
Do not wait. The smart money right now, we're seeing it here just as a firm. Huge money moving in, bigger portions of portfolios. With the November-December drop, with getting a stay in this big rally that we see coming early here this month, it's been nice to have a stay and have an opportunity to add to ounces. And I have not had conversations like I have in the last couple of weeks ever with my clients over the course of all our years. I mean, between the three of us, we've got 45 years experience. I've never heard these conversations with the dollar concerns. They know it's coming. You're not the only one with that feeling. There's too many things, right? I mean, what did we see in 8, 9, 10, 11 with the dollar weakness as a result of the responses? To Miles' point, it's the arrow in the quiver. But now you've got infighting, you've got impeachment conversations, you've got censorship and censorship controls and concerns, you've got protests, you've got cryptocurrencies that can't find a place and a stability, and there's so much money just speculating out there. But what is the one true go-to in times of uncertainty? It's gold. And unlike at any point that we've seen in a very long time, I'm seeing very well thought out, prudent portions of portfolios moving into the gold right now. And I'm with you. Not only the last gasp in the dollar, to me, last opportunity to get gold at a discount.
Yeah, and I mean, we make these feeling predictions as well as technical predictions, and we point out the fundamentals. Another sign that markets are manipulated would be that Biden does some kind of stimulus program and the dollar goes up. In relation to what? So yes, that's still possible. Yes, it's a possibility that the dollar keeps rising because maybe they do more stimulus in Europe.
That's right.
I mean,
that's right.
It's all on a relative basis. But the point we're, I think, making with owning gold and going forward with the crazy environment that we're in, and I think it's only going to get crazier, that's a fair bet. And I would say that there's a point that we should put on the show, and maybe reiterate a number of times for new listeners, is that you could own gold in any environment over the last 6,000 years. Let's say you owned 1,000 ounces of gold. Now that's a lot of gold, but 1,000 ounces of gold any time in the last 6,000 years, and you were a pretty well-off person or family. Didn't matter what was going on. Didn't matter if there was war. Didn't matter if there was a currency that was changing from world reserve currency. Didn't matter if you were trading stones or some other tablet or whatever it was, a ledger. If you owned 1,000 ounces of gold, you survived through all kinds of monetary history chaos.
Economic calamity.
This is no different. Might be a little harder with the technology that has such control over us, but owning physical gold, 1,000 ounces, you're going to be a well-off family. No matter what environment in the last 6,000 years. I don't think that's going to change. No matter what we go into with currency wars and all that type of thing, I think that's still going to be a thing that gets people through tough times.
So that's going to do it this week for Golden Rule Radio. We appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, ask your questions in the comments, and we'll try to answer them as best as possible. In the meantime, if you'd like additional information, you can head on over to our website at McIlvaney.com. We can be found on Twitter at ICA Gold or Facebook at McIlvaney Financial. And as always, if you'd like to talk to Tori, Robert, myself, or any of the other advisors at McIlvaney ICA, we can be reached at 1-800-525-9556. Thanks for listening. Have a great week.